There are some critical financial blunders that everyone, young or old, must avoid if they want to maintain their financial stability. Sadly, it's simple to slip into these traps, especially if you're not aware of them. If you commit these errors, you risk having to spend a lot of time and money trying to get out of debt. The more you're understanding of these mistakes, the more likely it is that you will avoid them. In this video, we are going to discuss about 10 of the most common money mistakes people should avoid no matter their age. Before starting, don't forget to like and subscribe to our channel for more future updates. So let's start. Number 10. Spending more than you earn. Spending more than you make is a very common occurrence. Maybe you simply can't stop eating dinner or lunch at restaurants, or perhaps you give in to the lure of retail therapy far too frequently. However, spending more than you make depletes your resources, making it difficult for you to save money and possibly pushing you into serious debt. Create a budget and find a means to stick to it to break this behavior. Number 9. Running up credit card debt. Numerous Americans are deeply indebted on their credit cards. Avoid attempting to join them. High interest rates are typically associated with credit card debt. When you are drowning in credit card debt, it is difficult to even keep your head above water, let alone move forward financially. Use a credit card only if you are determined to pay the balance in full each month. In this manner, you can enhance your credit history and benefit from whatever benefits your card may be offering without getting into debt. Number 8. Not having an emergency fund. You might believe that purchasing health insurance is a waste of money if you're young and healthy. Or perhaps you believe you don't need much auto insurance because you drive an old car. It is never a good idea to forego insurance, though. You require strong coverage in your insurance policy just in case. A sudden diagnosis might leave you responsible for thousands of dollars worth of medical expenses if you don't have health insurance. Or you can face a costly lawsuit if you cause someone to suffer a serious injury in a car accident. You will be responsible for those expenses if you don't have adequate auto insurance. Maintain reliable insurance, then plan for the worst but hope for the best. Number 7. Skipping insurance or buying too little of it. We understand that saving money for a rainy day is difficult, especially in today's world, where everything seems to be so pricey. However, you can never predict when you will require quick cash. Creating an emergency fund can greatly reduce your financial stress. Do your best to save enough money to cover costs for 3 to 6 months in order to achieve this. By doing this, you will have a safety net that will enable you to rebound should unanticipated bad luck strike. Number 6. Falling victim to lifestyle creep. You might start spending more as you advance in your work and earn more money. The term lifestyle creep describes this. Maybe you start using name brand items instead of generic ones. Another possibility is that you routinely overspend because you believe you deserve it. The silent destruction of your potential to attain financial objectives by lifestyle creep. Instead of wasting money, it is far preferable to stick to a budget and invest your spare savings. Future benefits of avoiding lifestyle creep can be enormous. Number 5. Buying a new car. Even though only a small percentage of consumers can afford to pay in cash, millions of new cars are sold each year. However, being unable to pay cash for a new car can also indicate that you cannot afford it. After all, having the money to make the payment is not the same as having the money to buy the car. Additionally, by taking out a loan to acquire a car, the buyer is paying interest on a depreciating asset, which enlarges the gap between the car's worth and the amount paid for it. Even worse, a large number of people trade in their cars every 2 to 3 years, losing money each time. A person may occasionally be forced to obtain a loan in order to purchase a vehicle. But how many people actually require a large SUV? Such cars cost a lot to acquire, insure, and fuel. Unless you need an SUV to make a living, or you tow a boat or trailer, buying one might be costly. Consider purchasing a car that uses less gas, is less expensive to insure, and requires less maintenance if you need to buy one or borrow money to do so. Because cars are expensive, if you purchase more than you need, you can be wasting money that could have been saved or applied to debt repayment. Number 4. Spending too much on your home. Home values increased during and immediately following the COVID-19 pandemic's peak. Even in formerly inexpensive areas, owning a home suddenly became little more than a pipe dream for many people. There may be a temptation to just pay the price to acquire what you desire. However, overspending on a property is probably something you'll come to regret. To that end, it can be worthwhile to hold off until the market cools off or until you locate a home that is more reasonably priced but still fulfills your needs and wants. Never rush in, only fools do that. Number 3. Investing too conservatively. The conventional wisdom in finance advises investors against putting all of their eggs in one basket. Consider the recent cryptocurrency boom and bust as one cautionary example of the significance of risk management. That does not, however, imply that you should never take a risk. In truth, riskier investments like equities can provide a high return on investment, and it is challenging to get that kind of return without accepting some risk. There are several things you can do to assist reduce the risk, such as diversifying your portfolio and keeping in mind that investing is a marathon, not a sprint. Think about speaking with a financial expert who can offer assistance if you are unsure how to go about doing this. Number 2. Using your home equity for frivolous things. If you took out a mortgage with a high interest rate and you can get one with a lower rate, refinancing your house is frequently a wise decision. However, it's never a good idea to refinance merely to access money for luxuries like an expensive vacation. Only when done for the correct reasons may drawing on your home equity be a smart move. If you are unsure about whether this decision is best for you and your situation, speak with a financial counselor once more. Number 1. Putting off saving for retirement. According to a Bankrate.com survey, Americans' top financial regret is not saving more money for retirement. Because of this, you should begin contributing to a 401k as soon as you start working and keep doing so until the start of your retirement. Hopefully, your company will contribute a portion of matching amount to your 401k, enabling you to maximize your savings. Early retirement planning might mean the difference between having the time and resources to enjoy life as a senior and having to work for the rest of your life. The art and science of living your best financial life go hand in hand. However, if you are careless, you can find yourself having serious financial regrets. A financial advisor can assist you in evaluating your options and developing a sound strategy. Thankfully, a little knowledge can go a long way. Make every effort to stay away from these financial blunders now that you are aware of them. Avoiding these mistakes can keep you out of trouble and aid in the development of a sizable savings account. This is it for today's video. What do you think of our video? Feel free to share your thoughts in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.